Hey everyone, thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin and we're going to be discussing its market cycles. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So, we do this video about every month or so, and I think it's a good way to just kind of take a step back and look, where is Bitcoin in the grand scheme of its market cycle, right? Where is it? Does it match up with prior cycles? Is it deviating at all? It's a good way to just kind of regroup and see where the cycle currently is. So, the first thing we're going to look at is the Bitcoin market cycle ROI as measured from the market cycle bottom. Now, I have 5 cycles on this chart. Cycle 1 and 2 arguably could be the same cycle. They could be. And the reason I say that is if you look at like the Bitcoin chart and you go back, many, many years, um, the peak, the peak for the first cycle in this case is this one, and then the second one is this one. But if you just say take the Q4 peak of every cycle, right? Q4 2013, Q4 2017, Q4 of 2021. You could argue this is one cycle by itself. The reason why it can make sense to break it up is because that right there was like a 94% drop, right? It was a really big drop, which is why I have it as two separate cycles. But if you combine it into one cycle, it looks like that, okay? The blue line, it would look like that. So we're going to ignore that one for right now because, so far what we've seen for the current cycle is that it's matching the last two cycles a lot closer than market cycle 1, right? And one of the things we've mentioned is there's some similarities between this cycle and the 2016-2017 cycle. And then there's other similarities between this cycle and the 2019 through 2021 cycle. And the similarities are like this, right? So if you measure it from the bottom, Bitcoin's ROI right now looks pretty close to where it was at this point in the 2016-2017 cycle, right? I mean, as measured from the bottom, day 828 of the cycle, Bitcoin is currently up about 6x. In the 2016 cycle, it was up about 7x, right? So all in all, the difference in ROI as measured from the bottom isn't really all that much as it stands right now. So that's at least an important aspect of this chart to kind of remind us where are we in the cycle. Now, there's also some similarities with 2 cycles ago. And that is, if we actually ignore the current cycle and we look at last cycle and compare it to the 2016 cycle, you can see that at one point Bitcoin got well ahead of where it, probably should have been in that cycle, right? The market got heated, and then we had to get a 6 to 9 month cooldown period before the cycle got back on track. The same thing can be said of this cycle, right? At one point, it got ahead of where it was in prior cycles, and then eventually it had to get back on track. And you can even look at it compared to the 2016 cycle and see right there, it kind of got ahead, and then it's been about 6 to 9 months going down before then picking back up and getting back on track, right? So there's some similarities with the 2016-2017 cycle in terms of market structure. And in fact, in terms of market structure, it looks more similar to 2016-2017 than 2019 through the 2021 cycle. But in terms of monetary policy and rate cuts after, rate hikes, there's some similarities with the last cycle as well. So it's not really either one of them. It's kind of a combination of both. But in terms of matching the market cycle ROI right now, it looks closer to the 2016-2017 cycle. Now, if you look at this, if it's going to follow the 2016 cycle, it would need to make another move up relatively soon if it's going to follow it, right? I mean, it could always deviate at some points. We've seen that happen in prior cycles. It's not like every move we've seen has been a perfect match, right? Over here, Bitcoin moved up, and in the 2016 cycle, it didn't at the time, and then it took a little bit later. If you look at last cycle compared to the cycle before that one, right, there was a time when it was going down over here when Bitcoin was normally going up, right? So it's not always a perfect match But if you were to want to continue to compare this cycle to the 2016-2017 cycle, this is where we currently are. Now, we've also looked at this through the lens of the running 1-year ROI. So if you look at the running 1-year ROI, you can see that it has fallen below 2. We suggested this was likely going to happen if Bitcoin did not start aggressively moving up in February. Now, the reason for that is because when you're looking at the 1-year ROI, you have to look at what it was doing exactly 1 year ago. And we can see that in early February a year ago, Bitcoin was in fact going up, and it rallied to just over 50K. So in order for the running 1-year ROI to stay at approximately 2x, which is about where it's been, for the last year or so, we would need to see Bitcoin back above 100K. If the 1-year ROI is to stay on track through March, then Bitcoin would have to get another rally going into sort of that March, April timeframe. If it doesn't, then the 1-year ROI could start to decay below that 2x level, right? That 2x 1-year ROI, right? It would start to decay below it, kind of like we saw it do a little bit in the last cycle, right? In the 2016-2017 cycle, you can see that it never really decayed too much below that level, and did eventually go much higher than a 1-year ROI of just a 2x. So it is important to keep that in mind when looking at charts like this, that, in order for it to stay at this level and for it to continue to match the structure from 2016, 2017, it can't just get complacent, because if it does, the 1-year ROI will start to decay. Okay. Now, there's other ways to measure this as well. One of the ways I really like to measure the Bitcoin ROI is by looking at it as measured from the halving. And if you actually look at this, it also looks a lot more similar to the 2016-2017 cycle in terms of ROI as measured after the halving, right? Looks more similar. In fact, if anything, it has started to deviate, because at this point in the 2016 cycle, Bitcoin was up about almost 2.5x. Today, it's up about 1.5x. Now, this could be an artifact of diminishing returns, but it is something, to at least keep in mind, that the halving ROI, the ROI after the halving, where it currently is. Now, what's really interesting is as measured from the halving for last cycle, if you ignore the later peak in November, Bitcoin actually topped on day 339 or so after the halving. Right now, we're on day 300, right? So that would only be just over another month from when Bitcoin actually topped last cycle. Again, it did get another rally in Q4, but it was a lot more muted, right? It only swept the high. It didn't really go that much higher. But you can also see that when that happened, the ROI of Bitcoin was actually a lot higher at this point in the cycle, right? In last cycle, as measured from the halving, Bitcoin was up about 6x. Today, it's up about 1.5x as measured from the halving. So there's actually a lot of differences in that, right? And that's why it looks a lot more like the 2016-2017 cycle in that regard. Now, you could also look at it as measured peak to peak. This is probably, the least important way to look at it. But if you look at it like this, the one that it matches the closest is the 2016-2017 cycle, right? Sort of you build out a base, and then you slowly go up. You build up to a new level, and then you consolidate for a while, right? Build up to a new level, consolidate. And when I look at a chart like this, I do have to wonder. My guess is that eventually this ROI from the peak will go below where it was last cycle, because I don't actually expect Bitcoin to go up this cycle 20x from the last peak. And I think even the most bullish people would probably agree that we're not going to see Bitcoin go up 20x from the last peak within the next 10 months. Okay, I mean, that would put Bitcoin at a really high value, and I don't think it can happen this year. So you'll likely see that happen. And so the question is well, how does that happen, right? Do we just kind of go sideways into it? Do we just stay just above it for as long as possible before it starts to decay? If you look at the last cycle and compare it to the previous cycle before that one, you can see that at one point it got above it, and then it basically decayed back down to it, and then got another rally after it went below that cycle ROI. Another way to look at it is to actually measure it from the April top and not the November top, if you want to take April as the more important top. If you look at it like that, you could argue that the cycle is actually a lot further along than maybe anyone's expecting. Because if you measure it from the April top, we're already on day 1400, and the 2016-2017 cycle topped after day 1473. So that would be about only 2 more months if you measure it from the April top. Again, there's a lot of different ways to measure it. Now, from a structural point of view, there are some things that you could look at for Bitcoin's, ROI and what it's done this year compared to what it did last year. For instance, if you look at the 100-day moving average, that's where Bitcoin is right now. That's actually where it held support in January of 2024 before then getting another move up. The question is does this move happen, or does something occur to prevent it from happening? Obviously, anything could theoretically happen, but I think that is sort of the thing to consider. And I go back and forth between, is it more important to look at what happened last year, right? Which would imply, and even not even just last year. I mean, there's plenty of times where you get to the 100-day SMA and it holds as support for a while, and it can even bounce higher for a while, right? It's not like it's that unheard of, and that's currently where Bitcoin is. If you actually look at the 2016 cycle, I remember this, and the more time that goes on, it seems like less and less likely to happen. But I will at least point it out just in case it does happen. If you actually look at the 2016 cycle, there was this high in the summer of 2016, and Bitcoin actually tested that level in January of 2017, right? It actually corresponded to the 2016 cycle high, right? The high for Bitcoin in 2016. Now, back then, it also corresponded to the 100-day moving average, right? And so today, we're looking at this, and Bitcoin, once again, is at its 100-day moving average, right? It's at its 100-day moving average, and it's February, right? It's a month later than where it was back over here when it got that bounce. And then it found support around that level again in March. So, if you're looking at the chart like this, you could say that Bitcoin will have these periods of weakness in like Q1, and then again in sort of Q3, right? I think one thing to consider here, there's two ways to look at it, right? And the more bullish way is to just say, well, it's testing the 100-day SMA, which is exactly what it did in Q1 of 2017, right? This is exactly what happened. And it was also during a period when the dollar had started to drop, right? The dollar dropped, and as the dollar was dropping, Bitcoin got that correction to the 100-day moving average, but it also corresponded to the 2016 yearly high. This cycle, it's hard to know what's more important, right? I mean, does it need to go back down to that level? I don't think it needs to do anything. After all, Bitcoin needs a reason to go down, not a reason to go up. If the macro data evolves as normal, then you could argue that Bitcoin's more likely to go up than down, because Bitcoin doesn't need a reason to go up. It just goes up because people buy Bitcoin. And so I guess the question is, will the 100-day SMA hold right here, kind of like it did in 2017, kind of like it did back over here in January of 2024? Or will it lose support and retest the 2024 high? Because remember, in the 2016-2017 cycle, the correction actually corresponded to, they were the same thing, right? The back test of the 2016 high also corresponded to the 100-day moving average. This time, they're not actually the same thing, right? The 100-day SMA is all the way up here at like 96K. What is it exactly, right? It's almost 97K, whereas the 2024 high is back at 74K, 73, 74K. There's quite a big difference between these two levels at this point. If you actually look though at a year-to-date ROI of Bitcoin in 2025, it actually matches 2017 pretty closely at this point. So you can see that this is right around where Bitcoin was in 2017 at this point. It then had a move up and then came back down again to basically the same levels that it's been at, right? I mean, Bitcoin was still below a year-to-date ROI of 1 as late as March in the 2017 cycle. So even if it does play out like 2017, you could still see Bitcoin around these prices in another month, month and a half, even if there is a rally to a higher to a new all-time high, a new cycle high, right? Even if there is a new rally to a new cycle high, you could come back down again in March and then gear up again. So that's another, interesting way to view this market. And I think the way that, you know, it would make the most sense for this stuff to play out in the sort of the easiest way would be that if it just plays out like all prior cycles, right? I mean, that would be nice. And it's funny because I think, a lot of people, it's like it's so easy to overcomplicate things and to be like, well, this is why it's going to be different and whatnot. But so far, all the cycles have occurred with peaks in Q4 of the post-halving year, Q4 2013, Q4 2017, Q4 of 2021. So, I think it makes sense to put a lot of weight on that case unless the market shows us a reason not to put weight on that. At this point, it hasn't, right? At this point, it hasn't. At this point, it still looks like a fairly normal cycle. But there are periods in history, and I'm not saying this to just like spread FUD or to scare you or anything like that. But again, there are times in history where you get left translated cycles. Now, one of the ways that Bitcoin could sort of put those fears to rest would be to just put in a new all-time high, and then it would go a long way into helping confirm a right translated cycle. But remember that when you get things like inflation and the labor market kind of out of whack, it can occasionally lead to left translated cycles. And I'm just going to provide a very brief example. Looking at the stock market in the 1970s, a normal right translated cycle is like this, where you go up for 3 years and down for 1. But occasionally you get a left translated cycle where you go up for 2 and down for 2, right? And up for 2 and down for 2. And when it happens like that, then the top usually occurs at the very end of the election year or the very beginning of the post-election year. Now, that's not clear. It's not clear yet which way this is going to break, right? If it's a right translated cycle, then Bitcoin should have no problem putting in new all-time highs as the year goes on. If it's a left translated cycle, then Bitcoin would break down at a period where it normally breaks up, okay? So what I mean by that is if in a month Bitcoin hasn't made a new all-time high, right? If it hasn't made a new all-time high, then it would start to call that idea into question, right? At this point, it's doing what it's always done. It's moved up and then gone sideways, right? And it's just sort of stair-stepping its way higher. So at this point, I don't really think you can say that it looks any different than any of these prior ones, right? Where it's consolidated after a run higher and then eventually gone up again, right? But, if in a month we're sitting here and Bitcoin hasn't put in an all-time high and instead it's still struggling down here, then that might call into question a left translated cycle. The good news is that I don't really think you have to sit here and worry about it or try and predict it. I think if you have a left translated cycle where the peak occurs well before anyone thinks it's going to, there would likely be a macro lower high later on, right? There would likely be a macro lower high. Like even with the S&P, when you had those drops, and it was left translated, you still had, a rally a few months later that led into a macro lower high that then made it a lot more obvious, right? So you didn't have to sit here and worry if it was a right translated. You could have just, with the S&P at 108 back then, it's not like you had to worry, like, was it a left translated cycle or not? It dropped, and then it got a rally back up to like 106. And as that macro lower high came in, it became more obvious. And that occurred again in the second quarter of the year. And in this cycle, when it was left translated, it was a high of 121, and then it had a macro lower high at 112 in October, right? So what I would say is that, if we are unfortunate this cycle and it ends up being left translated, it's probably something that would become more obvious as the year goes on if there is a drop when the market normally goes up, right? And that I think would help to sort of figure out what type of cycle is it. In the short term, I think it makes more sense to hope for the best, right? I mean, hope for the best and hope that Bitcoin can get another move up to a new cycle high where it can then sort of put those fears to rest and say, you know what? No, this is a normal right translated cycle and we don't need to worry about that stuff. Again, if you look at any of this stuff, right, you look at the year to date ROI, it's exactly where it was in 2017. If you look at the ROI from the cycle low, it's basically, more or less where it was in the 2016, 2017 cycle, right? A lot of this stuff is at the same spot, more or less, that it was at back in the 2016, 2017 cycle. I will say one more thing, which again, probably people aren't going to even really care about at this point, but even if Bitcoin doesn't break out here and there is some type of scare in the market, let's say with all these layoffs we're seeing sort of at the federal level, if that ends up spooking the market in, a really bad unemployment rate print in a month or two, it still doesn't even necessarily mean the cycle has to be over. And the reason I say that again is because, well, in the 2016, 2017 cycle, Bitcoin tested the 2016 high in 2017, and the cycle still went on, right? So in that case, right, you could argue that Bitcoin could go as low as here, and the cycle could still theoretically be intact because that's what happened in 2017. Again, I'm not saying that's what's going to happen. I'm just saying that you could argue that it could happen and the cycle would still be intact because in the 2016, 2017 cycle, when Bitcoin got that drop, it was about a 35% drop, right? Which is about the same that it would be right there, right? It'd be about a 30% drop to get to that level. And ultimately, this cycle did continue back then. So for me, when we're talking about cycle theory and whether it's right translated or left translated, I would say it could go as low as the mid 70s and still have a really strong chance of being right translated. I would only really get concerned if it goes and goes below that level, right? Like if it were to go into the 60s, then that would make me think something different. But as long as it's here or higher, I think the odds of a right translated cycle are higher. Anything below the 2024 high, then it kind of raises some tough questions. So what I would say is in the short term, we're sort of entering into the window here over the next few weeks where if it's going to follow the 2017 cycle in terms of ROI from the bottom, in terms of ROI from the halving, it should move up, right? If it's going to follow the prior cycle, especially also from the 1 year ROI, the running 1 year ROI, if it's going to follow that, it should move up soon. If there's a drop instead, then you could also look at the ROI after cycle peak and go peak to peak and say that, look, I mean, Bitcoin at this point in the 2016, 2017 cycle, by day 1206 was actually still 20% below the prior all-time high. And it still was able to continue higher later on. So that's the way I'm currently thinking about this market, trying to navigate this market. Obviously, we've talked about Bitcoin dominance a lot over the last few years and how Bitcoin leads the bull market and why being Bitcoin heavy makes a lot more sense than being altcoin heavy. Obviously, as you get further into the post-halving year, that can change. Bitcoin dominance can go down in post-halving years. That's like the 1 year that it does typically go down. But if it's going to go down, right, then it would likely be, if it's going to go down in sort of a major way, it would likely be after a major market cycle top, like a major parabolic rally by Bitcoin. That's when you had sort of these major alt seasons in the past, was after Bitcoin topped out, right? And so, there's still a lot to be said of just kind of sticking with the king, and just being patient and sort of navigating it that way. As I've said before, you're not going to find me with dominance above 60%. Like, I don't know how much higher it's going to go. It's always possible that it's topped out. We are seeing the dollar drop, and it also dropped around the same time in 2017 as well. The 10-year yield has been dropping recently. Overall, that's going to be a drag. Or the dollar dropping is favorable for, global net liquidity. So as long as the dollar's dropping, it could still be a headwind for things like Bitcoin dominance. But that's what I think right now, guys, of this market cycle and what I'm looking for over the next few weeks. So if it's a normal cycle, normal right translated, it should move higher. If it's going to be left translated, then you should see a drop when it would normally go up. So you would see a drop into March or April rather than rise into March/April. So hope for the best, and we'll see what happens here as the next few weeks take hold. And also, watch the S&P as well. I mean, the S&P right now is right around 6,100. And so it's kind of right around the prior all-time highs, right? The S&P right now is right around the prior all-time highs. So this is also a really important level. I imagine that if the S&P 500 can break out of this level, then it increases the likelihood that Bitcoin could follow suit, right? Because I mean, if you look at the current highs by the S&P, right, you had one in December, one in January, and you have one right now. With Bitcoin, you had one in December, one in January, and you don't have one right now. Bitcoin's still below 100K. So if the S&P can break out, then it would raise the likelihood that Bitcoin could. Um, if it can't break out, then it would probably diminish a lot the ability of Bitcoin to do the same. Um, and so we're gonna go ahead and wrap it up there. I was thinking about maybe talking about ETH a little bit, but those are my general views on the market. Hopefully you guys like the content. If you do, make sure you give the video a thumbs up and subscribe to the channel and check out Into the Cryptoverse Premium at intothecryptoverse.com. I will mention one more thing about ETH actually before I go, because I do want to mention this. Um, if there is a drop in the market at a time when the market normally goes up, then it would likely cause ETH to fall below the current levels, because it would likely be a drag on something like ETH. Now with ETH Bitcoin to me looks relatively low, right? I don't know if ETH Bitcoin has bottomed yet. I do know that last cycle it was exactly right around the time that ETH USD broke this higher low structure. That's where ETH Bitcoin bottomed, right? So if there is a drop when there's not normally a drop, it likely means that the Fed's going to come to the rescue. You would get a lot looser monetary policy, and it would allow some of these other assets to bottom out against Bitcoin in a more conclusive way, right? So if the stock market does drop when it normally would go up, causing ETH to drop a little bit right there, right? If it drops into here, that would actually more convincingly allow ETH Bitcoin to bottom out. If you look at like the S&P and you overlay it with ETH USD back then, ETH USD had that drop below the higher low support level on an S&P 500 correction, right? Even though the S&P was still in a macro bull market, right? That's what ultimately caused ETH USD to lose support and to fade for a little bit. And then a lot looser monetary policy came in, and the Fed cut rates a lot back then, and then we saw a massive surge in both Ethereum and the S&P 500. So I think that with this in mind, there's like an obvious way to navigate the cycle, in my opinion, right? As an investor, no one really knows what's going to happen, but again, if it's a right translated cycle and Bitcoin does not show any weakness in the short term, then Bitcoin will likely lead the bull market. If there's a correction, it could still be a right translated cycle, but it would allow for Bitcoin dominance to more convincingly top out, allow for things like ETH Bitcoin to more convincingly bottom, and then we would still be in the cycle, but it might change the conditions of the cycle, right? It might allow some of these assets that are bleeding to actually start outperforming Bitcoin in a more durable way. But until something like that happens, it's been pretty safe to assume that Bitcoin will outperform most other assets. And so, I think until there's an obvious change in the structure of the market, that's the safest assumption. Again, I'm going to go ahead and wrap it up. I'll see you guys next time. Bye.